Last night at midnight, 45,000 U.S. dock workers walked off the job, launching a strike that has shut down 36 ports along the East Coast and the Gulf of Mexico, threatening to disrupt the nation's supply chain. Joining us right now to provide some data into just how much disruption we're facing is Alan Murphy. He's the CEO and founder of Sea Intelligence. And Alan, we've heard a lot of different numbers. By your estimates, how much does this cost the nation a day?
It's incredibly hard to estimate. Various estimates from different economists puts it somewhere between $3 and $5 billion per day. But it's both what does it mean in delayed shipment, what does it mean to higher freight rates. It's all a very volatile game, but certainly it's going to be very, very costly, several $1 billion per day of strike. And that's the fundamental challenge here. We don't know how long a potential strike or how long the strike will potentially last.
Well, let's walk through some of the potential timelines on this. What happens if this lasts the first week or two? What are the ramifications we can expect to see?
Well, it will certainly be a challenge especially for importers, especially if you have perishable goods moving in refrigerated containers. If they start to fail or they lose power. If you've got bananas, they're supposed to ripen over a certain time. If they spend another week, they start to spoil. Within a week, it's going to be costly and it's going to impact those importers that are waiting for the boxes. But it's a manageable crisis. If it lasts 2 weeks, then it starts getting to be a big challenge because we'll start to see vessels missing that are now stuck in ports outside of the U.S. ports. They won't make their journey back to Asia and to the other origin regions, which will push up freight rates. So 2 to 3 weeks, it starts to get a really big problem, and we will see cost of shipping globally, not just to the U.S. East Coast, but globally start to push up.
Can they be rerouted to Canada or to the West Coast?
That's not really much of an option. Some of these vessels will be calling a port in Canada or to different transshipment hubs in Caribbean. They'll try and offload to as much as they can, but there's simply not enough room in the Canadian and Caribbean ports to handle all of this cargo. So there's really few options outside of actually just waiting outside a port, just like we saw during the pandemic, a line of vessels for as long as the strike lasts.
If this lasts even longer, 2 to 4 months, then what?
Well, certainly then we're talking about a massive, severe impact on the U.S. economy. By our estimates, almost certainly to push the U.S. into a recession this year if it lasts more than a month.
If it lasts more than a month, okay. You've said that the longshoremen have timing on their side because of what's happening in the Red Sea right now. You want to explain that?
Well, basically, before the Red Sea crisis, which is basically the inability to sail vessels, especially from Asia to Europe, via the Suez Canal. Now you have to go around Africa because of attacks from Houthis out of Yemen in the Red Sea. That basically means you need a whole lot more vessels to be able to sail the same distance, about 14% more vessels. And that means that whatever slack we had in the system back in December, which was around 15%, completely got removed because of the Red Sea crisis. Now, if the Red Sea crisis had not happened, then the strike now would have a much less severe impact because the shipping lines would have plenty of excess vessels to put in. Now they don't have any excess vessel. All the slack has been taken out of the system.
The idea that so much was shipped in early to try and make sure there were supplies that were here for retailers for the holiday season could lessen the impact, or at least not allow consumers to see the impact quite as quickly. How long before consumers do start to see it with either empty shelves or much higher prices that they are paying? And I ask because we've got an election here 5 weeks away.
Yeah. It all varies depending on what kind of commodities we're talking about. Perishable goods move much faster, obviously, to the end consumer. As a rough guide, we're talking about 2 months, to max about 3 months is usually the flow from the cargo moves into port until we start seeing it out in shops. So the impact is likely going to be after the election season. The brunt of the impact are for an extended. But certainly, inventories will already be starting to draw down. So the whole supply chain is starting to loosen up. So we might already see prices go up in anticipation before we hit the election.